Hey, it's Justin Poole, your renegade realtor from South Pasadena, California. I've been doing a series here about why I believe housing values will decline in Southern California for about 2 years and to the tune of about 20%. I think at this point everyone knows that housing values are coming down. And the question then becomes how much and how long. So I wanted to cut to the chase and tell you what my prediction was. So if you don't like it, you can move on. But I think it's important. I think I've done a lot of research, and I feel strongly about these. I'm not just pulling this out of nowhere, and it gives me no pleasure to say these things, except maybe for the fact that properties got too expensive for the rank and file Californian. But I don't really have anything to benefit by saying property values will go down for 2 years and by 20%. At this point, that's maybe a conservative estimate because there's just so much going on in the world right now, and one of the reasons I'm doing these videos is that I feel as though there isn't enough kind of macro analysis of the world economics and national economics to give buyers and sellers a good idea of how to make decisions. So I'm putting my 2 cents in. I'm sincere about this. I do a lot of research, and I just thought I would share it with you. I've been playing with the idea of exhibits as though we're in a courtroom. I'm pleading my case as to the future of California real estate, and I'm using exhibits. So this is Exhibit F today. Exhibit A was the price earnings ratio. That has gotten to be too dramatically different. In other words, earnings have gone up a little. House prices have gone up a lot, and I think you know that. The Exhibit B is the new jacked up interest rates. People are saying, well, if it gets bad, I fear that people are saying if it gets bad, they'll just bring them back down. I don't know if they can bring them back down at this point due to inflation. So I think they're here to stay. Exhibit C was the new builds coming online shortly. There were some delays, but now there's about 100% more than average housing coming on the market this year and the beginning of the next year. So that'll be a big flood. I hate to use the word flood, but there'll be a flood of inventory coming on the market. I don't like the dramatic language that everybody uses, but then I end up using it myself. Exhibit D was world economics, and a lot of people are tuning out of the news, which is understandable. I've been tuning in and doing a lot of research. I've been on this planet for a while. The predictions for the world economy looks bad. How else can you say it? Humans are resourceful and bounce back from things and figure things out, but in the short term, I think the economics of the whole planet are looking pretty bleak right now. So that's D. And then E, Exhibit E was the hustle, and I call it the hustle and misinformation. I thought that warranted its own segment because I feel like there's a lot of information that's just not very helpful and misleading, and some of it is just out and out wrong, and I find it very frustrating from the federal government as well as the real estate industry. And so today we're in Exhibit F, and Exhibit F was supposed to be the domestic economy, but as I researched it, I realized that you can't really separate the world economy from the domestic economy. So there's going to be a lot of overlap and going back and forth. I think in the 1950s you could, because so much of the economy in America was about the American economy. But now it's the North American economy is so tied in with the rest of the world that it's just hard to separate them out. So I wanted to start with a was just listening to an economist a couple days ago, and he was saying that this was the worst year ever in the stock market. One of the things he mentioned was that traditionally, when you're advising people on their investments, you stocks and bonds balance each other out. And he said this year they're both terrible. So there's just not a lot of options for investors. Usually when stocks are down, the stock market is doing well, you turn to bonds, and then if the stock market picks up, then you go back to that stocks. But it's this year, he said, it's dismal, and it's hard to believe it's the worst year ever. Now we have 6 more months, so we'll see what happens. But that undoubtedly will be causing a downturn in the housing market. One of the things that we're dealing with today is the financialization of housing. So many investors have gotten involved. Big hedge funds buying up whole neighborhoods and whole streets, and I think it's at this point large investors are 20% of the market. Or let's just say people who are buying as an investment, not as a place to live. That's over 20% of the market in North America, and investing in properties is not looking good. The interest rates are really putting a damper on that. When people invest in properties, there's something called a cap rate, and that's the shorthand is that's the profit that they make on an investment. And a cap rate of 6% is considered pretty good. But when the interest rates go way up and you can't get the rental you want for the property, and there's certain other factors come into play, it doesn't look attractive. And then your cap rate is at 3%. Your interest on the loan is eating up profits, so your cap rate goes down based on that. And then it's not as attractive anymore. And investors are not buying properties because they love the neighborhood or the architecture or historic preservation. They are looking for money, and when they're not making money, they move on. And there are new. Recently, there have been bonds have become more attractive, so they're going to just switch to bonds because it pays more, and they're going to get out of the housing. And so a lot of the housing will come on the market, and also then they're not going to be buying it as much. And the data is out now. The interest or the demand from investors has dropped significantly. So that's a big change in the market. I think also that the fact that housing has gotten so expensive that from that perspective as well, it's just like, well, aren't you paying too much for these houses? So a lot of these hedge funds are buying way above what the estimated value of the house, which is at some point it's just going to be like, well, you can't justify these purchases anymore. So I think that's going to be a huge factor. Another thing with a global economy is China. They are having a really tough time economically. They're having their own asset crisis over there, where they're having a real estate downturn that is really dramatic. I mean, I've never even heard of anything like this, and I think most people who study this stuff haven't seen this either. If you haven't searched ghost cities of China, I highly recommend you do it. It's mind-boggling how much the Chinese people have invested in real estate and driven the prices through the roof to astronomical amounts. One of the problems with China is that they are inhibited, or they don't trust the stock market. They don't invest in the ways that we enjoy in North America. They tend to put all of their investments in real estate. They'll buy a house, and that's where their savings goes. Now, what happened, unfortunately, in China is that prices kept ratcheting up, and people just kept buying, and values kept going up, and they never had a downturn. They've had this incredible, extraordinary economic boom for 50 years. It's just been accelerating, and now Prices have gotten ridiculously inflated, and now it's starting to deflate. And when you're only buying as an investment, and values start to go down, there's no reason to buy, because certainly it's not a good investment anymore. So, and this is happening en masse in China, to the tune of, hundreds of millions of people have thrown all their money at real estate, and now it's going down, and it's a tragic thing, because I don't think they believed it could go down, and now they're talking about numbers like $30 trillion of lost value in the Chinese real estate market. I heard recently that that the Chinese real estate market is the largest asset class in the world, to the tune of about $70 trillion. That used to be the whole world economy. It was $70 trillion, $75 trillion, and that wasn't that long ago. It was 20 years ago. Now the loss in value is estimated at $30 or more trillion. So that's going to be a huge impact on the world economy and in the United States economy, especially Southern California. I'm coming full circle here, because so much of the real estate market in Southern California is pumped up by Chinese investors trying to get their money out of China. They don't trust the government, they don't trust the authorities, so they're afraid they'll be they'll have trouble with. So they want to get the money out of China, and so they buy in Southern California. It's one of the favorite places in the world for Chinese investors to buy. Well, with an economic downturn that they're facing, I do not see that money coming and anywhere near the amount that we've been seeing. So that by itself, that one thing will specifically to Southern California, that will really put a damper on world economics. And now I got to touch on Europe, because it's Europe is really in crisis. Who knew? I mean, I thought this type of invasion was over. I think most people did, and Russia just rolls into Ukraine, and hardly anybody expected it. Well, now that has created this incredible hike in fuel prices, energy prices. I have a diesel car. It's check diesel prices if you feel bad about gasoline. So this has created this energy crisis that is, you have to go back to the 70s. I remember the 70s. It was pretty scary and weird. Well, we're seeing that again. It's really, in a lot of ways, Russia is winning this war by we're all getting strangulated by these high energy prices. Europe is freaking out. They are not enthusiastic, and they are certainly not. The economy in Europe is dreadful for the war, but for a lot of other reasons as well. England. I just heard numbers coming out of England. They're expecting 12% in inflation. They're 12% inflation for this year. So that's pretty awful. We have 9.1, and we're freaking out. Now I think the numbers are higher than that, but I'm not an expert on that subject, so I'll leave that for another time. But 12% now it's projected, but it's going to be at least 10 in England, and that's they have problems, and so do we. These are two. China and by itself and Europe are these two huge trading partners of ours, and that's part of their health, their economic health is a big part of what keeps America going economically. So those two players are, they're not out of the picture exactly, but they're severely diminished in what they're going to be doing economically. There's big trouble coming from those two places, and there's big trouble across the whole globe, which is just amazing to me. The number of countries that are in big trouble in the global the scene. Sri Lanka no longer has a functional government. It's gotten so bad over there that too much debt. They're having it's a financial crisis which has gotten so bad that the government is non-functional at this point, whatever that means. But and now Sri Lanka, you say, well, it's a little country. can't even find it on the map. Well, a lot of economists are suggesting that Sri Lanka is the canary in the coal mine. Sri Lanka is going the way that a lot of countries are predicted to do so, to go. So that's, look, in my whole life, I've never seen economic news like this. So pretty major. You know, the economic situation for rank and file Americans is dreadful. You know, their energy costs, the economy, consumer sentiment is as low as it has ever been. You know, that's got to mean something. So, I mean, I do like to think that, and I know that humans are very resourceful and they bounce back from these things. But in this case, I think it's going to take a long time before the whole economy has to get restructured in a lot of fundamental ways. And there's not going to be any easy way out of it for some time. Again, I don't want to do penny the sky is falling, but you know, if you're looking to buy or sell, you should be aware of these things. And if your realtor's not talking about some of this stuff, they should be, because these are things that are really going to matter. And by the way, if you have comments on what I'm saying, I'd really like to hear. I'd like to hear your take on the world economy and what your feedback is. And if you disagree with what I'm saying, I'd really like to hear that. But if you have your own take on why you think the economy is doing what it's doing and is going to go where, you know, if you have feedback on where you think the economy is going, please put it in the comments. The rank and file American is having a lot of trouble buying houses. The houses are more expensive adjusted for inflation than they have ever been before, including 07, 06, 07, 08, when prices were at that time the highest they'd ever been before. So, you know, it's a cliche to say what goes up must come down, but this is an economic system. This is free market capitalism. These things go up and down, whether we like it or not. I wish the economy wasn't so volatile, but it is. And so where do we go from here? I'd really like to get your feedback and to hear from you as to what your predictions are. Again, I'm going to go back to my point at the beginning. I think housing is going to go down for the next 2 years. The value of housing in Southern California is going to go down for the next 2 years by about 20%. The more I study, the more I think it's going to go down even more, but I'm going to stick to 2 years, 20% at this point. And I'd really like to get your feedback. And the next episode, I'd like to touch on the foreclosures and evictions, which is a whole nother thing going on because of COVID. That's going to dramatically affect the housing market in a downward direction, I believe. And if there's some X factor that's going to that's going to get wages way up and keep prices way up, I'd like to hear about it. I don't see anything on the horizon. I think better days are ahead of us because America is an extraordinary place. The tech industry going down in value is a real problem. One of the things I'm sure you've been hearing that there's there's all these layoffs in tech. Tech is taking a beating in the stock market. People, and that was going back to the low interest rates. People were borrowing money and investing in tech. Now it's not easy to borrow. It's expensive to borrow. It's not cheap to borrow anymore. So tech is taking a huge hit. There's a lot of industries taking a huge hit, but tech is a special industry because the tech jobs are so high paying that they have a major influence in a much greater influence in the economy than they should. When a tech job is lost, that tends to take 4, maybe even 5 other jobs out of the economy because the pay is so high that people on the high end of the income spectrum tend to do a lot more, make the economy go a lot more than people on the lower spectrum. So when those jobs go, that makes it much more dramatic. You say, well, that's one job loss. Well, that's a lot more than one job loss when it's a high-paying job like that. One of the things I've been hearing about a lot is these zombie economies where you have too much of the tech market has excuse me. Too much of the tech market is pumped up by investment from cheap borrowing, and too much of the tech market industry does not make a profit. So these are companies that need to be flooded with money for a long period of time in the hopes that they will eventually turn a profit. Well, they're not turning a profit, and the money's drying up. So a lot of these companies are going to go under. So you're going to see a big tech, well, I don't want to say implosion, but you're going to see a big decline in tech. And that's it's one of the beauties of the United States. We were the leader in tech, and it's not looking good right now. So that's another thing where, among other industries, they're taking a huge hit. And when they take a huge hit, it really affects the economy. So that's yet another reason that I think, and you know, Southern California, the West Coast is very dependent on tech, and Southern California not as much as Northern, but it's a big part of the economy here. So that's yet another. That's, you know, I'm trying to bring in all these factors that are going to influence the market in a downward trajectory. Anyway, I hope you're still here. I appreciate you listening, and if you're buying, think twice. If you're selling, this is the year. Thanks for staying with me. Have a good day.